Hi everyone, this video is all about journal entries and we're going to go through a number of examples because this topic is so important to get. And I'm your instructor, Brandy. In this video, I'm going to go through 4 examples. So if you want, you can pause this video and copy these down so you know what I'm doing. For each one, we're going to go through how this is affecting the accounting equation, apply our debits and credits, and put them into the journal. So for the first example, we have FSBO investing $10,000 to start a business. From the company's point of view, they are receiving $10,000 cash. So our cash is increasing. Remember that when someone invests into a company, that will affect the capital or the owner's equity. So our capital is also increasing. So now let's go to our accounting equation. In our example, cash is increasing. Cash is an asset. So we are going to debit cash, and capital, which is an account in owner's equity, is increasing. So we're going to credit owner's equity. Now let's put it into the journal. So the first journal entry, we're going to debit cash for $10,000 and credit capital to FSBO for $10,000 and add our description. For our second journal entry, our asset, our car account, is going to increase by $5,000 and we're paying on credit, which means we're going to pay later. That is our liability. So our accounts payable is going to increase. We are recording a debit for car or clown car for $5,000 and we're crediting accounts payable, and remember your description. For our third journal entry, when we're recording our advertising expense, expenses are a little bit confusing. If you remember, expenses fall under owner's equity, but they decrease owner's equity. So when our expense account is going up, our owner's equity account is going down. So in this case, in order to add in our expense, we need to debit it. We're going to pay by cash, so our cash on our bank account is going down, so we are going to credit our cash. For the third journal entry, we'll record an expense for our Facebook advertising, and our debit is going to be to the expense account, and our credit is going to be to however we're paying. In this case, I'm assuming we're paying cash. For the fourth journal entry, FSBO is charging $250 for the child's birthday party, and the parents are going to pay later. And because they're going to pay him later, that's actually a future benefit under accounts receivable, and that is an asset. Our asset is increasing, so we're going to debit our accounts receivable account. Revenue is what it's called when we charge for our services, and service revenue increases owner's equity, so we're going to credit it. For our fourth journal entry, we are recording an accounts receivable debit for $250 because the parents are going to pay later, and service revenue is increasing by $250. That is a credit. All of our journal entries have a date, they have at least 2 accounts, they have debits and credits, and those debits and credits are equal to one another. And all of our journal entries have descriptions.